Please do not say I didn't tell you that this was going to happen. If it does happen, this is a major warning for all cryptocurrency investors. Yes, I sold all of my cryptocurrency and I plan on buying back before the end of the year because I believe the super cycle is going to be January, February of 2025. And yes, if it does dip and I am correct, I will be buying the dip. If my investment choices upset you, then you might be emotionally investing. The world will not end if I'm wrong, and the world will not end if I'm right. Cryptocurrency is not a religion. Do not get emotionally triggered and do not just blindly hodl. Selling assets does not compromise my values. Stop making investment decisions based off of people on the internet. And most importantly, if you do not do your own research, you will get wrecked. This is not financial advice. One, because of legality reasons, and I want to protect myself. But most importantly, this is not financial advice because I cannot tell you what to do with your life, especially when yours is completely different from mine. If you are watching this channel right now, it is made for the truth and only the truth. My goal is to share data, evidence, and proof, and I do not get emotions mixed with my investments. Please protect yourself and invest accordingly. The cryptocurrency market is not safe right now in my personal perspective. There's three different things that are really bothering me. This is why I sold my crypto. Now, does it mean that it's the end of the world? Does it mean that the bull run's not going to continue? I don't believe so. I believe the bull market is going to be beautiful. And I think it's going to happen in the beginning of next year, January, February of 2025. But I also believe that something is boiling up. Now, I'm not talking about crypto specific. There's different realms, right? We have the Federal Reserve kind of cycle. We have like the liquidity cycle from the Federal Reserve. Then we have the Bitcoin cycle, which is the Bitcoin halving. Then we have the altcoin cycle. And then we have the micro trends, the narratives within the altcoin cycle. Now, what I'm talking about here trumps all cycles, which is the Federal Reserve cycle. If you are watching this video, let me be very clear with you. The Federal Reserve is the most important entity in the world when it comes to any asset class. That's my personal opinion. You can hit the history books and look into how the Federal Reserve was created and all of these things. But long story short, they control the printing and vacuuming of the United States dollar. They essentially control the supply of the United States dollar. And that indirectly or directly affects all assets everywhere because the United States dollar is the world reserve currency, meaning every other currency is denominated in USD. Let me say it again. Every other currency is denominated in USD. So for example, euros, they compare that to USD, and pretty much every currency and every asset on the face of the planet denominates their currency or their asset in USD. So this gives the United States strategic control over the world directly or indirectly. So I personally look at these conditions, the Federal Reserve cycle, very closely. Now, we had the Federal Reserve cutting interest rates by 50 basis points. This is not a normal occurrence. What you guys have to understand is that this does not happen. It does not happen. The Federal Reserve does not change momentum. There's only a handful of times in the past 20, 30, 40 years where the Federal Reserve has done this. Less than 6 times, I think, whatever the specific number is, it's like less than 10 for a fact. I think it's like 5 times they've ever done this. So I want to look at the bond market in today's video. I want to, dive into what bonds are doing. Bonds are basically an IOU from the government. So I can go to the government, I can give them my cash, and they'll give me a bond. This is considered obviously very safe, right? It's a bond. It's very safe. The bonds, right? Think about it for a second. Bonds are an IOU from the United States government. From the United States government. So the government is pretty much guaranteeing that you will get paid back. So there's a lot of bond traders. They're typically more conservative investors. And I want to watch what's going on here. So we have a chart here, the 10-year Treasury constant maturity minus the 2-year Treasury constant maturity. Now, the chart that you're probably used to seeing is something like this. Now, there's something called the inverted yield curve. And the inverted yield curve, to me, is pretty significant. Why? Because it shows something that kind of defies the laws of physics or finance, however you want to put it. It doesn't really make sense. But I like to explain it like this. Let's say hypothetically you had a friend and two friends that wanted to borrow money from you, right? Let's say the first friend wants to borrow 100 grand and he'll pay you back in 10 years. The second friend wants to borrow 100 grand and he'll pay you back in 2 years. The question is, which one will make you more money, right? And which one has more risk associated to it? Think about it. The person that is going to pay you back in 10 years has more risk associated to it because that's a 10-year time frame. You should make more money. If there's higher risk, you should make more money for that loan versus the 2-year loan, right? Just think about that for a second. Because if we're talking about interest, right, you charge both of your friends interest, you should make less on the 2-year. This is how it usually goes. Usually, that's how life should work. But the market right now is basically assessing that short term's higher risk. And this is where you see things like this. Look, 10-year treasury constant maturity minus 2-year treasury constant maturity, it's inverting. An inverted yield curve is a financial phenomenon where short-term interest rates are higher than long-term interest rates for government bonds. Under normal circumstances, long-term bonds have higher yields than short-term bonds because investors demand a premium for holding them longer. However, when the yield curve inverts, it reflects investor expectations of slowing economic growth or potential recession. This is because investors flock to long-term bonds for safety, driving their yields down, while short-term rates remain high due to central bank policies or other economic factors. An inverted yield curve has historically been viewed as a predictor of economic recessions. Now, hopefully you've seen this chart. The gray here shows recessions. So let's look at the definition of a recession. A recession is a period of significant economic decline characterized by reduced industrial activity, lower consumption spending, and the rising unemployment. It's typically refined as 2 consecutive quarters of negative GDP growth. Now, 2 consecutive quarters of negative GDP growth. The problem with that is who cares, right? My goal here is to make money. We're invested in altcoins, or our goal is to invest in altcoins, which is a risk on asset. It's higher risk than stocks, right? It's like investing in the stock market. Who cares about GDP growth? There is periods of time where we have negative GDP growth, but the stock market is going crazy. So what I want to look at specifically is the stock market or risk on assets. So the first thing I want you guys to understand is that basically the inversion is when we get past 0%. So this is where it's inverted right here. And we're going to be looking at the stock market and risk on assets. That's the important part. Trust me, that's the important part. That's where the money's made, right? So as you can see, it's inverted. Now, typically people have made the mistake by saying that we're in a recession. It just went inverted. I remember even when it actually started going inverted over here in June 2022, people were calling for a massive recession. And at the time, I was bullish. And the reason why, it's all about timing. It's the same thing with the Federal Reserve. People are always like, Federal Reserve dropped interest rates by 50 basis points. Liquidity is going to come in the market and we're going to go into a bull run. Yes, that is technically true, but it's all about the timing. The timing is the most important variable when it comes to trading, right? Buy low, sell high. So as you can see here, we go inverted. We're inverted, right? And as we come back up, this is the point you want to look at. When the inversion basically shifts to normal, right here is where you want to look. I believe that's specifically when the market crashes. Again, right here, we move up. Now, and again, we don't want to look at recessions because recessions is negative GDP growth, gross domestic product, which in a lot of cases has nothing to do with investing in stocks or risk on assets or crypto. By the way, the reason why I use stock market as an indicator for crypto is because they're both considered risk on assets. Risk on assets is high risk assets in the market. That's what they're both considered. The difference is the stock market has way more data. Altcoins, you can't really find long charts. There is no long charts. The longest chart you can find in crypto is Bitcoin. And so if you're looking specifically at altcoins, to me, the best indicators are high risk stocks like the Russell 2000 specifically, which we're going to be looking at, as well as the S&P 500. I think the Russell 2000 gives us the best indicator we could possibly find. But if we look right here specifically, you could see that this is recession. So as we flip back over this 0% line, we have recessions. We flip back up, recession. Flip back up, recession. We just flip back up. We just flip back up. So this is like, when I mean near, I mean near. This is not like next 6 months. I mean like I sold all my cryptocurrency for a reason. I'm talking about next 2 months, 1 month, I believe we're going to experience a crash. And let me show you the reason why. So this chart here compares two things. The Russell 2000. So the Russell 2000 is 2,000 small cap stocks. The significance of this is that it's a small cap, meaning it's higher risk in the stock market. There's a lot of companies that do corporate buybacks and things like that. This is why we don't look at the S&P 500 all the time. Sometimes I do look at the S&P 500, and the S&P 500 is basically an index of the top 500 stock companies in a specific category, more of like tech companies, internet companies, things like that. Now, the Russell 2000 looks at small cap in the technology field. So it's as close as possible to crypto as we can get. But as you can see, this chart goes all the way back to like 1987. You can't find a crypto chart that does that. So we can analyze the inverted yield curve in comparison to the historical context of a high risk on stock, like the Russell 2000 index, right? Very important to understand that. So I want you to look at these periods. I told you, I don't look at the periods when it inverts. I look at it when it comes back from the inversion. So I've highlighted these specific periods. We have one here, we have one here, we have one here, we have one here, and we just experienced one right now. So the question is, what happened to risk on assets in those periods of time? And as you could clearly see right here, we have a steep fall pretty much every single time. And when I mean the timing is on point, I mean the timing is on point, almost to the day. So as you can see right here, we cross back over, and this line, this red line is at 0%. So this is like the inversion, right? Crossing right back over right there. We have a big fall, 30% in the Russell 2000, meaning all these micro caps plummeted, big fall. Now, if we come over here, we have the same exact thing, and it's even worse. Big fall throughout the entire time period. As you can see, we inverted back up, big fall. This red line right here shows that we continue to decline. This was overall a 41% drop. If we come over here specifically, again, we inverted back up. We have a big fall right here. Look, 58% down, almost like a couple days later, maybe a week or two later. If we continue, we have something right here. Same thing, big fall. This could have predicted COVID. Look, and this was a small, you can't really see right here. Oh, Alex, it's not inverted. If you look over here, it is inverted. It's just very, very, very like little bit, like a small inversion. So right there. So this wasn't like super aggressive. This is probably the weakest data point, but it is a data point and it did call it. And we are like right now, right here. So when I mean soon, I mean, seriously guys, this is just one data point. We have other videos we're gonna be dropping that goes over everything else. Today, I did want to talk about specifically the inverted yield curve, but this is no joke, right? This is nothing to play with. If you are still in the market, that doesn't mean sell everything tomorrow. I personally have a different lifestyle. I talk to people in my group all the time, and you can get access to my private group. I go over this stuff way earlier than it shows on the internet. It's in the pinned comment below. Go down low to the pinned comment. Take advantage for sure. But the point here is that your lifestyle is different from mine, right? I own a fund, right? I trade other people's money. In a fund, there's no consistent cash flow, right? In personal funds, you have consistent cash flow because there's a certain amount of money that comes in every single month from your paychecks or whatever the case is. Hopefully, you have some cash flow on the side. So it might be different from you. Maybe you don't want to sell everything because you have that cash flow to stack up on the side. So if there is a dip, you can buy in. With a fund, it's different. I'm trading other people's money. I don't have cash flow in a fund. It's not how a fund works, right? There is no extra cash flow. It's significantly different. I'm also way more conservative with something like a hedge fund because for obvious reasons, I have to treat it like a professional. My goal is to lock in returns to show people that I can get returns for the fund to attract more investors. So it's completely different from your personal situation. There's a lot of people getting very emotional because I'm talking about this market turn down that could potentially happen, and that's not what you want to do. If you're watching this video, you want to treat your investment as a professional. Me providing you information shouldn't trigger you. You should not feel emotional. You should not feel compelled to sell. You should not feel FOMO. You should not feel fear. If you feel any of these emotions, you are probably emotionally attached to your investment. That's not my goal here. My goal is to simply provide you with the evidence behind my decisions. I make a theory, I provide evidence. If you feel anything that's like making you want to hate me for some reason, or like I see people on the internet, I'm like, I'm trying to help you. Like, this is what I do on a serious level, right? Seriously, this is what I do. So I have to treat it for what it is. I'm not going to sit here and sugarcoat it. You should thank me for putting out the information instead of being a marketer, right? There's a lot of people on the internet, they're marketers. And what they want to do is just scratch you on the back. They want to make you feel good. They don't want to conflict, because if they conflict, they get a lot of downvotes, people unfollow, dislikes, it goes against their opinions, and it makes people feel angry and upset and emotional. Here, we take emotions out of investments. If you're on this channel and you're watching this channel, you need to take emotions out of everything and use these videos as a way to understand that my goal is to truly educate you so that you can become better, even if it's at the loss of my followers or views or whatever the case is. That is my moral obligation to you, is to tell you the truth even when it hurts, when it really hurts. Because if you think that me selling now was significant, imagine what's going to happen at the exact top. There is nobody in the market right now. This right here is the cryptocurrency search term. If you felt triggered or emotional because I sold and there's no one in the market, look at what happens. Look at this spike. Imagine up here. Imagine how much ridicule, how much hate, how much bashing I'm gonna get when I tell people to sell the top. Just think about that for a second, right? It's gonna be the most unconventional thing. Everybody's gonna think that we're in a full-on bull cycle and nothing's gonna stop us, and it's gonna go to the moon, and every new investor is going to be bullish and buying as much as they can and calling me crazy for selling. It's going to be 10 to 20 times worse. So I'm glad this opportunity for the Federal Reserve and the decreasing of interest rates happened now. Even if I'm wrong, I'm glad this happened to train you for when the top comes, because 1% of people get out at the top. Let me be clear. 1% of people get out at the top. And if you don't think me selling at the top is going to be controversial, it's going to go against all the influencers, everybody's going to say probably the exact opposite. Honestly, the more ridicule and persecution I get selling the top, the better chance I am of actually being right. The whole point of selling the top is going completely against the grain. If you have anyone agreeing with you, if everyone agrees with you, it's probably not the top. That's the point. You have to get out of the market. How do you think the big whales are selling? The big whales are selling as massive amounts of people are buying. They have to sell their coins to somebody else. So how do you think they do it? They essentially make the narrative extremely bullish, and as the market is going up, they're selling and dumping their bags. That's the only way they could get out. If you understood this market, you understood liquidity, there is no other way to sell $1 billion but to get other people with $1 billion to buy as you sell. It's impossible in any other way. So the point here is what I'm trying to say is this is just data. Please just take everything with a grain of salt. Do your own research. My life is different from yours. And this is my official recommendation. This is the recommendation I gave to my group. If you don't want to sell, that's fine. What you should at least do is consolidate your coins to safer coins like Ethereum, right? Safer high liquid coins. And then what you should do is put limit orders in. You could do this on Uniswap. I put a full tutorial in my group. You could do this on Uniswap. You could do this on Coinbase. I don't recommend centralized exchanges like Coinbase. So don't put all of your money on Coinbase. What I did is half and half. So you could do half on Uniswap, half on Coinbase. You could put a limit order so if it drops while you're sleeping, it will automatically sell your coins. Leave it in like 1 or 2 coins, maybe just Ethereum. And so if the market does fall like I'm predicting, then at least you're safe. And if it falls and you automatically sell, you don't have to experience those crazy negative returns, and you could still participate in the bull run and feel good about yourself and all these things, right? So again here, before we wrap up, I want you guys just to know that I'm in it to win. That's all it is. This is not a religion to me. I don't hodl. I've disproved hodling a million times. My goal is to truly make money and bring it into the physical world so that I can better my family, become more free, and all this financial independence, everything that, people talk about. It's not going to happen if you just hold your crypto. It doesn't work that way. This is not a religion to me. This is simply a financial asset class. This is a job for me, and my goal is to make as much money as possible. And that's pretty much it for this video. If you like the quality of this content, hit like. If you don't, leave some constructive criticism, subscribe for more video updates. And like I always say, if you don't get with it, you will get left behind. I also wanted to show you guys. This is my community here, and this is my actual profile. So I want you guys to know I do live Q&As in the inner circle twice a week, and I also do new videos on a consistent basis, market updates. I mean, pretty much everything I do, I update my communities before anybody else. I do portfolio reviews, meaning people submit their income, they submit their financial situation, how much cash flow they have, how much savings they have, essentially their entire financial footprint. They submit it to me with their altcoin holdings, their experience level, and all of these things. And then I can accommodate with customized help of, basically what I would do and things like that. So I essentially do portfolio reviews. You get all of my buy and sell calls before it hits the internet, and you get so much more. So I highly recommend that you guys head on over to the link in the pinned comment below. I have 2 different groups depending on your income level and how much money you have in crypto. And yeah, the link is below. Thank you guys for watching the video. Peace out.